So, there are people who are lenders and there are people who are experts in this business and have a variety of resources they bring and perspectives they bring to the business. And fortunately, Josh Moorvitch is one of those people I've known for years and had a chance to catch up with recently and wanted to share with you. Josh, how you doing?
I'm doing great, thank God. How are you?
I'm doing great. So just a little background, you're primarily, or your primary hat is as a mortgage lender.
Correct.
And you're based in West Los Angeles?
Correct.
And what would you describe the basic product that you're offering? What's the most common? I know you do a lot of different things and have the ability to have a lot of tools in your toolbox, but what are the 2 or 3 most common products or services that you offer clients?
Well, the niche of our office is that we work in the residential and the commercial space. So on the residential side, we do loans between houses all the way up to fourplexes. So I would say some of the most common work that we do on the residential side is traditional financing, whether it's for purchase, whether it's for refi, and a lot of investment properties. So whether they be 2, 3, or 4 units, vacant or not, that's typically a very popular product in our office. On the commercial side, we also work on shopping centers and retail and apartment buildings. I would say in construction and bridge, I would say the most popular products right now that have been on the commercial side is a lot of repositioning of multifamily, where people are buying apartment buildings, adding units to the back, moving tenants. I know COVID was a little bit of a halt to that. A lot of bridge lending right now where people are repositioning property, or they have loans that are due that they can't take out, or whatever fast closing that they may need. But I would say we're seeing a lot of the bridge financing on the commercial side right now.
Interesting. So bridge financing is something where it's not the long term because the rates maybe aren't ideal or the property is not really ready, but you give them financing in the meantime because there's collateral value. Is that the primary product?
That's the goal. That's the crux of the deal. But essentially, it's an asset-based loan story that has to be told. It has to make sense. It's not as credit driven. It may not be as income driven. It's more of a make sense deal depending on what is going on. And with the higher interest rates right now, hard money and conventional money are not that far apart. So
Isn't it interesting?
Yeah.
Isn't it interesting?
It's amazing. I haven't seen this in a while. So if somebody's trying to do something complex, instead of having the minutia of going through the bank or a bank product or a conventional product, it may make sense just to go into that hard money loan or bridge loan or however you want to classify it. Each one is individualized and still get the deal done for that client.
A lot of people talk about, of course, we're in one, geographically, we're in the same market, we're in West Los Angeles, which I think you would classify overall as fairly steady compared to some more volatile areas, Phoenix and Austin, Texas. Yet, even in our area, there's some drama going on. So what do you see? How is it affecting your clients' asset class today?
So on the residential side, the biggest hit we've seen is basically in that $2.5 to $5 million range, where those luxury homes are sitting a little bit longer. You're seeing about anywhere between 10 and 20% discounts on some of those properties that are not selling, that are now going for rent, as opposed to cutting the legs off of the market and just trying to dump it. That's probably the area that got hit the hardest, and the way I look at it. People that are still qualifying for $1 million or $1.5 million, they're going to be there all day. Those loans are still achievable and they're still going through. We're seeing a little bit more of seller concessions, and educating sellers on how to use proper mortgage products to buy rates down, so that if they're going to give a concession, rather give it to the buyer as a credit towards their loan, so that they can get them cheaper financing by 1% or 2% and help them get into the property, instead of cutting the price by $50,000 or $100,000. So
now you've been around for a while to know that, and I've been around for a while as well. But I'm surprised at how hard it is for people to understand that or take advantage of that. Are you seeing that being accepted more, the buy down as a concession rather than as a straight price concession?
If you don't have a stubborn seller who's willing to listen and understand it, yes, it's a very popular way to still get maximum dollar for your property without giving away the farm and giving away a much lower price. essentially what you're doing is whatever that buyer is going to qualify for, you're giving away about 2% on a high end, on the high side of whatever that purchase price is at 80% of that purchase price. So for example, if you had $1 million purchase and it was an $800,000 loan, think about 2% of 800,000 would be 16 grand. By the seller willing to give up about 16 grand as a concession to that buyer can now qualify at that $1 million mark, or will be more tempted to go in because their interest rate, instead of being at 6%, maybe at 4% for a couple of years, and they'll get that temporary buy down, which makes more sense. And then as the market settles and the rates stop moving, in about a year or two, they'll be able to refinance it, and it's a win-win for both sides.
Let's talk about the business a little bit. I'm sure that you see, as I do, a lot of real estate agents under pressure where, the unit count's down about 30%, though the prices are up from last year, maybe 15%. So, I mean, I have a nice pipeline, I'm doing pretty well, but I know a lot of the agents around me are really struggling. You must have clients you've done business with around you that are having a tough time. What are the ones who are getting through this time period or succeeding, doing different than the ones that are struggling?
I look inward when it comes to a question like that, being that we're also, thank God, busy and we still have business and been doing this for almost 20 years. And JDM funding is coming up on its 14th year.
Wow.
So we do have credibility out there, which still brings us business. However, it is harder out there. There is less deals. The deals that are coming through are tougher, or may not be something you really want to work on. So what we're doing in-house is more newsletters, more information to our clients in our marketplace, more phone calls, more networking. I met you at your networking a couple of weeks ago. So you've got to go out there and you've got to pound the payment, and your luck is as good as the effort that you put in. You make 100 calls, you'll be luckier than if you made only 10 calls. And my advice to everybody is to open up the Rolodex, get on the phone and start reaching out to people. See what you can do to offer somebody else help. Not always about the deal. See what you can offer them as value. What do they need? And perhaps in that conversation, maybe your services will come to play. Now, at least that will be there for the future.
Well, it's interesting you bring up, because the event that you came to, we've been doing that monthly for a couple of years now, and it's been great for us. And I'm always surprised by people who are brand new who come to me and say, "Hey, I'm struggling. What do I do?" And I say, well, one thing is, you come to the event every month. It's free for you. I'm hosting it. Invite your clients, invite your contacts, invite your lenders, invite your affiliates or vendors you work with, and they never come back, because that's work, right? The work is making those phone calls. I saw you, I knew right away, hey, I had met you probably about, if you started JDM 14 years ago, I probably met you about 13 years ago, I think. And yet to see you, to get a chance to talk to you in person, look, you've both been so busy the last few years, I doubt we'd ever get together. And here we are both, and I think that's why we're both doing businesses. We're still doing the things you're supposed to do. And there's less competition right now. To some regards, it's pretty good. As a salesperson, it's pretty good. I feel bad for a lot of my colleagues who are struggling. I try to encourage them. You must have the same thing. You must have people around you that are struggling. They're not doing the things that you're doing, but they're struggling. So how do you encourage them? What do you do? Or where do you point them to get some encouragement to keep pushing through?
Well, my advice has been, thank God, and we're blessed. And I'm a religious person, so I believe everything comes from God, and that's very important to me. We have to do our part. And my advice to people is stop getting comfortable. Do things that you are not comfortable with, that change the picture, change the game. Again, going out to networking events, going out to the golf course, if that's what you do, or taking people out for lunch or for dinner, sending out gifts, gift cards, contacting owners, contacting your other clients, just seeing, hey, how they're doing. Maybe there's something that you can talk to them about. And all of a sudden, while you're on the phone, you may be getting a referral. So my advice, and this isn't rocket science. This is just getting uncomfortable and making things happen. And I believe, and if you do good business, you treat people correctly and with honor and with respect and ethics and morals, and not trying to hit a home run on every deal, just hit a lot of singles, hit a lot of doubles right now. That'd be great. I think you'll weather the storm, maybe a little bit tighter. Personally, I think we're going to have a benchmark here this year because people are filtering out of our business. A lot of people are not in there anymore. There are less, I would say, let's change the words. There are more credible people that are still around that know exactly how to get things done, that have gray hair like yourself and myself, that know how to weather the storm, know how to move around the system to still get deals done and bring value to our clients.
It's funny you said, I mean, literally, I'm primarily a listing agent, so I spend more time with other buyers and their lenders, unfortunately. And I see the remnants of your competition who should have been out of the business years ago, but hung on because of the drop in rates. And I feel like this is the last deal they're going to do before they give up. And unfortunately, it's on my listing. I tried to vet them out. I tried to whatever. And it's just interesting how this adjustment in the market brings these things to fruition. You know, we had I'll just share with you one example. We had this transaction that's way behind, and the lender's been misleading us all along. And I keep pointing it out to the buyer's agent and the buyer, but we're stuck with them, given the details. And I get an email at 1:05 that the loan processor is out to lunch. And I said to myself, you know, even if it's true, of course, every loan processor employee deserves a lunch break. We all need to be healthy, take some time and nourish ourselves and maybe get exercise. But you don't tell the client, I can't give you service because we're out to lunch. Unless you're a government employee, nobody does that. I think there are a lot of mortgage professionals who got away with that for years because there was not enough capacity and lenders didn't want to bring on capacity. And now that's starting to show. And you realize that was your competition, and they're just crumbling by the wayside. It was too hard to get customers to go to professionals. Now those people are going to be out of the business. I think that's really a good opportunity for you and your firm.
I agree. In our office, it's all about service. I mean, our mission statement has nothing to do with financing. It has to do with leaving people better off than when they came in. Whether that means hearing them out, making a referral, maybe giving them some advice. Maybe sometimes it's not doing the deal. Sometimes we have to protect our clients from themselves. And they don't really understand what they're doing.
Yeah.
We opened in the heart of May of 2009. So right in the middle of that crash, that's when JDM opened its doors.
Yeah.
So
wow.
I know what it is to do 2 or 3 deals in the first year when it's bone dry, but we survive. And I think if you do the right things and you provide that service, I appreciate lunch as well, and everybody should grab their lunch and do whatever they need to do.
Right.
However, the client doesn't always need to know that information. Right?
Exactly. Lie to us. Tell me you're working on the file, at least. Have the professional standard to lie to me about it. At least don't tell me the truth. I don't even want to know that's what's going on.
It's tough to hear that, but at the end of the day, from every story that I hear, it's something that you can educate your staff with. Hey, see that? We don't do that. And this is exactly why. And we always try to make our standards higher and higher, give more away. Usually a lot more things happen good in your favor.
One of the things I learned early in the business is it's never a problem until it's a problem, right? It's not a problem that you went with some online lender because they promised you the lowest rates. And as long as interest rates were just dropping, it was never a problem because they'd be able to make the promise they made. They had no intention of making, but for the fact rates went down. And if they couldn't deliver, they would just disappear and reappear as a new company the next day. It's not a problem because it wasn't a problem. Now it's a problem. And even today, I think some of the deals are getting bailed out. This one's an example where they got bailed out because rates have dropped and they're able to deliver what they promised the customer, but for their delays. But this is definitely a time where I think everybody has to pay attention because having been through this, not everybody's going to be around. Not every major company is going to be around. Not every mortgage lender is going to make it at some point. There's going to be a continued, I think, winning of the competition. And those are your opportunities. How do you express? I know the hardest thing for you to express to someone like me is we should do business with you because you're integrous, because you're honest, because you work hard, you do the fundamentals. Nobody pays attention to that until everything goes wrong, right?
Unfortunately, it sounds cliche, but it's true. And you know, JDM is all about closings. I mean, if you're on our newsletter, you get once a month, you get updates on closings. We have random closings. It doesn't make a difference if it's a $300,000 deal or a $40 million deal. It's irrelevant. It's about closings. And the reputation that we have is all about getting to the finish line.
Yeah.
And part of the education process to clients, excuse me, is all about, it's not only about rate, it's also about terms. What is the deal going to look like? Are you going to get bait and switched by the time you get to the finish line where they promised you whatever, and then when you get to the end, you're upset, the rates change, the programs change, because nobody did their homework and tried to do a proper underwrite, and sometimes deals just don't get done. Clients need to hear that hey, you're not getting this done the way you're going about it. And just because they want to hear what they want to hear and people are willing to tell it to them, those are the people that usually get hurt. They lose their deposits. They're negotiating penalty fees because they now have to extend the escrow for 30 or 45 days. They're now picking up other costs that they shouldn't. And the experience is bad. There's anger, there's anxiety from all sides of the table. So in a transaction, I look at that we're building a community with everyone. Agents on the front side for the buyer, agents on the seller side, you've got escrow, you've got title, you've got the entire borrower's base, depending on how many people are involved. It's your moment to shine and provide marketing of how good you can be to all these people, because they'll remember that service. So my advice to the agents that are on your team and other agents that are out there is, don't promise too much. Do what you can and be honest about it. And I know we go back to honest is, hey, we're all about being honest, but be truthful, because at least if you're honest and you can show what's real, whether you get the deal or not, at least you're not going to have egg on your face by the time you get to the end, and you'll have another client probably for how many years to go.
One of the challenges in this business is the more times somebody says to me, I would never lie to you, the more likely they are that they're lying to me. So it's one of those things I've learned, that who would accuse you of lying? Why would I even think that you're lying to me? But you have to tell me that you're not lying to me so many times. It's only because you are. This business, it is interesting. It is crazy. It is dramatic. It is fun. And it's been, good business for me, and I know for you as well. So look, Josh, I really appreciate your time. I know you're busy. You got a lot going on. I appreciate the chance to meet with you personally in person, and today on video. And thanks for sharing your message of, I think, of hope and of inspiration to people in business. Thanks for your time today.
It's a pleasure. And thank you for the opportunity to speak to you and your audience today as well.